Welcome to Mission to Grow, the small business guide to cash, compliance, and the war for talent. I'm your host, Mike Vanoy. Each week, we'll bring you experts in accounting, finance, human resources, benefits, employment law, and more. You'll learn ways to access capital through creative financing and tax strategies, tactical information you need to stay compliant with ever-changing employment laws, and people strategies you need to win the war for talent. Mission to Grow is sponsored by Assure. Assure helps more than 100,000 businesses get access to capital, stay compliant, and develop the talent they need to grow. Enjoy the show. How to control workers' compensation costs. It's a question a lot of people don't ask because I think they don't even realize how much is controllable. Got a great guest today to talk about this topic. Rob Campbell, he's been in the payroll HR benefits world for going on 20 years now. 5 years at a company called Comp as a workers' compensation pay-as-you-go provider. And his current role is Vice President of Partner Strategy. Welcome back to the show, Rob.
Thanks, Mike. I appreciate it.
So I really think this is one of those topics, especially smaller businesses. They're used to getting quotes from an insurance carrier for their house, for their car, for their whatever, and they're used to shopping rates. But when you have your house, you don't think, well, how could I actually lower my rates if I had, a security system? If I did this, I did that. So what's controllable? So I think consumers are trained to think that they can't control rates. For those who maybe aren't going to, whether you're watching on YouTube, listening to your podcast in your car, what's the one message you want people to walk away from this if they don't hear the full hour-long discussion on what is or isn't controllable about workers' compensation cost?
Yeah, I think a really important thing to know is that the workers' comp costs are a lot more controllable than business owners realize. And there's things that they can do to really impact and control their costs in a long-term strategy, beyond some of the normal stuff that people do think about, like shopping.
Yeah. So let's just dive in. You and I were doing some chatting before the show here, and you kind of put it into 3 big buckets, and we can go deep on each of those buckets really as much as you want. What are the 3 big drivers that put more control than business owners think? Give them more control than they think about ability to control costs.
Yeah, if we look at a couple of buckets, you have, number 1, risk management. So how do you manage the risk within your business? And business owners are managing a lot of different components of risk. So, for these purposes, we're talking about the risk of workplace injury. The next bucket is once an injury or an incident does occur, how does the business manage that circumstance? How do they manage that claim? And who manages it for them? And then managing the insurance policy, right? Having a good agent, or really a great agent that manages your insurance policy and helps you make sure that you're hitting on the nuts and bolts management portion of that policy.
So let's go back to the top, to risk management. I can think if I have a higher risk worker pool, maybe a construction company, the guys up on top of the roof probably are in a different risk category than maybe my front office bidding quotes. Am I starting to think about that in the right way about how to mitigate risk?
A little bit, right? When you look at the workers' compensation class codes, those are, predetermined, right? Based upon the operations that the employees performing within the business. And you're right, there's different class codes for different people within the business. We talked about the importance of that, in the past and in some other sessions. But when I talk about risk management, as it pertains to the workers' compensation policy and those workplace incidents that happen, I'm talking HR infrastructure. I'm talking safety management, hazard identification. I'm talking about something that people don't often think about when it comes to this, that is critically important in company culture, training, education. And then another component that so many business owners, as you know, have so many misnomers out there is, how do I handle 1099s? And how do 1099s impact my risk from so many things, including the workers' compensation policy?
I think that's a really big one. Last time you and I talked on the show, I learned a few things that I didn't know existed. Around 1099, I want to carve that out as a pretty major subcategory. The first one you listed was HR infrastructure. What the heck does HR infrastructure have to do with mitigating risk? And maybe we got to back up a little bit. For those who don't know that you can even control your costs, what is it about being safer? I think it's as literal as fewer claims, you get to reduce your race. Just talk how that works.
Yeah. So I guess let's talk about workers' comp pricing in general, right?
Yes.
Just a quick summary. Workers' comp is essentially a payroll tax. The premium that you pay, it's a percentage of the payroll wages, right? We talked in our last session about a better way to pay your premiums via performance-based billing, which is pay-as-you-go workers' compensation. But and what also impacts that is the amounts of claims that you have, right? So you have your rate per $100 of payroll, or the percentage of workers' comp premium that you pay on those wages. You have your various employee classifications, and then you have the impact of your performance as a business, which in workers' comp comes down to claims. How often does an employee get injured? What's the cost of that? And how does that perform relative to the class code that you're in, and in comparison to all of the businesses that are in the same class code as you? So the claims that occur to a roofer in the roofing class code are not being compared to the claims of a company that has all clerical employees.
Yeah.
It's how do you compare against all roofers? So the other component of your pricing that you earn over a period of time is your what's called the workers' comp experience modification. And the workers' comp experience modification is a reward or a punishment based upon how your business in your workers' comp class code performs relative to all of the other businesses that are in the same class code as you. And it's not magic, it's math. It's not negotiable, right? There's a formula that each state Department of Insurance uses to determine the experience modification. And it's a reward or a punishment. So if you perform worse than other industries in the same class code, you get a debit mod. And that's a penalty against your policy. It's a percentage of increase over the standard rates. If you perform better than expected, which is the goal, you get a credit experience mod. And both of those are non-negotiable by the insurance company. If the Department of Insurance issues you a 15% credit, so a 0.85 experience mod is a 15% credit, then when the insurance company gives you your quote, that 15% credit is applied. It's non-negotiable, right? You earned it, you deserve it, you're entitled to it. On the flip side, the same thing happens on that debit mod. If you earned a 1.15 debit mod, then the insurance company has the right to add that additional 15% premium on top of that.
And what's the range? Is it plus or minus 15? Is that the extremes, or how big of a swing can there be?
Yeah, I mean, I've seen companies, unfortunately, that are in atrocious, potentially catastrophic positions with their workers' comp. 1.0 is par, right? So everybody starts at 1.0, which is even. I've seen companies at 2.8, 3.1. You look at 2.8, you're 280% over the standard rate.
So you're paying 2.8, nearly 3x the rates as other like firms, like employee groups.
Correct.
And what's the low end of the range, the safest? Well, I wouldn't even say safest. The companies that have the lowest number and or dollar amount of claims.
Yeah, so they'll bottom out by class code, right? Because it looks at the overall history. So it'll bottom out by class code. I've seen experience mods of, at the very low end, 0.57, right? Okay. 0.58, 0.6. So you're 43, 42, 40% under what the standard rate is for that class code.
So the message for employers here is, hey, if you're awesome, you have the opportunity to reduce your rates by maybe a third. If you're not awesome and you don't take this seriously, your rate mods, you could pay 2 or 3 times as much. So yeah, the penalty here is probably a lot bigger than the potential reward. But regardless, it's a continuum. Forget 1.0. It's a continuum that you should be managing to, right?
It is the ceiling. The penalty that you can be assessed is significantly higher than the reward that you can earn, um, because there's no cap on that ceiling. That really
Right.
could continue depending on your performance. And
Right.
when you look at an industry if you're in a very competitive industry, as most are, if you're comparing a flooring installer and you're out there, you're bidding your jobs, you're putting your pricing out there. If your workers' comp costs are 50% more, 100% more, you have to factor that when you're bidding your
Right.
work, right, to make your margin. If you're in the manufacturing business, right, very low margin, high volume type of industry, in most cases, if your workers' comp experience mod, your workers' comp cost is higher than the widget manufacturer down the street, you have to put that into your pricing. And it drastically can impact your competitiveness, and it without a doubt impacts your profitability.
Yeah. Yeah. And in a world where the two flooring companies, I love that example, raw materials are going to cost you the same. You got the same vendors you probably work with, same cost of materials. The labor pool sets sets the labor rate. What you're going to pay per hour salary is relatively banded. Um, this is a variable that you have to account for. That literally, that's interesting because I think so many people think of workers' comp probably, oh, it's a cost. I need to reduce costs as much as I can. But in some industries, especially with the higher mod potential, this could absolutely, either it's going to erode margin, or it's going to hurt your competitiveness and your ability to even win bids.
100%. And even beyond that, so where I am, and in many states, if we stick to the contractor industry, if you want to bid work for states and local governments, municipalities, they won't give you the jobs if your experience mod is too high. They'll usually give you a level of understanding that claims and workers' comp are expected. But a lot of those, where I am locally, if your experience mod is above 1.2, it's unlikely that the state is going to award you that contract, because you've demonstrated that your job site is run riskier than others in your
Wow.
business.
Wow.
So when you're out there bidding work and trying to get jobs like that, that could drastically hinder your ability to even get selected as the company of choice.
So going back to, that was a great, 10 minutes. I'm glad we went there. So going back to risk management. So safety management, hazard identification, that one feels self-evident, right? It's like, okay, I need to have a safer work environment.
Yep.
Curious about a couple other things I wrote down: HR infrastructure, company culture. I mean, I could conceive of a thread. What are your thoughts about how those things can and should impact your mod rates?
Yeah. So we'll start with just HR infrastructure as a whole, right? Because some of the feedback that I've gotten on a fairly regular basis over the last 20 years, we'll work with a business owner, we'll get a copy of their claims history, and our goal as an insurance agent is to paint that in the best possible light. Right. We want to take all the facts, we want to put as much polish on them as we can, and then present them to the insurance company in the best possible light. And so lots of times when I'm asking about claims, I will get a very common response of, well, that was fraudulent. This employee got injured over the weekend. This happened. I heard from this employee that this is where it actually occurred, but the insurance company just decided to pay the claim anyway. And what I will tell you, that last part of the insurance company just decided to pay the claim anyway, that wasn't a decision. That was a position that business put the insurance company in, usually because of their HR practices. So, do they have a handbook with company policies that address incident
Yeah,
reporting, right? Are their managers prepared to investigate an incident, no matter how minor? Do they have the appropriate documentation, right? Attorneys will play the long game, and know that there's a lot of turnover in certain industries. And if they drag out that litigation long enough, those employees won't work there any longer and no longer have any desire to show up and tell their story in front of the court of what actually happened for that
sure.
business. So, documentation, training, preparation, all of that boils down to your HR posture.
Yeah.
The responsibility is on the business to provide the insurance company with the legal standing to fight whatever claim they think is fraudulent. And unfortunately, if you read a lot of things out there, as much as 50% of workers' compensation premiums are associated with fraud. And so it is the responsibility of the employer to have the appropriate HR infrastructure in place that establishes company policies, has a plan to respond to them and investigate them, and provide a nice response for the insurance company as to why that claim was fraudulent.
That makes a lot of sense. So, we talk on the show all the time, the importance of a handbook and incident reporting policies, whether it's, so a lot of times these conversations are more around, say, sexual harassment or just harassment in general. Um, but I haven't connected the dots until right now that this also goes for incidents involving injury, and then the proper assertion, was this a work injury, a home injury, to
Yeah.
and then create that documentation. So when it gets adjudicated, that even if the people are no longer in my organization who did the documentation still lives. That's kind of what you mean by good HR infrastructure, right?
100%. I mean, an employee, we have, another, not that, another example that was pretty recent of an employee 3 months after the incident filed a workers' comp claim. And it was a six-figure workers' comp claim. It was very large. And they told their story. This is what happened at work. And I didn't seek treatment immediately, but the injury was lingering. And when I did seek treatment, I needed surgery. And this is where that claim grew.
Sure.
And so the insurance company has the obligation to open up a claim and investigate. And the first place that they go back to is the employer to say, okay, we had an employee that said that they were injured at work. This was the incident. What can you tell us? And that employer had nothing. They weren't aware of it. But worse, they didn't have any policy that required that employee to report any
Okay.
incident, no matter how minor. So the
I'm
the
glad you
insurance
said that, because
company,
my brain, I'm thinking, well, if they didn't know about it, how could they be liable? But their liability is not creating the policy and the procedure in the first place that would have notified the employee through an annual checkup with the employee handbook that they've certified that they've read, received, and understand that is the policy, right?
yeah, because now the insurance company could, had that existed, the insurance company could say, well, hey, your employer wasn't aware of this circumstance, and you signed off on a company policy that said you are required to notify your employer within 24 hours, 8 hours,
Yeah.
whatever that policy states, of any incident, no matter how minor, right?
Right.
And so that allows the employer to then document, ask witness statements, right? Get some proof that this actually happened. Whereas now, 3 months down the road, when did this happen? Who was around when it happened? The employee doesn't have a very large burden to demonstrate all of those things, right? They say this is what
Right.
happened. I was at work, and this is the injury that's a result of it.
Yeah.
So
Right.
with the appropriate HR infrastructure, company policies, management training, the ability to investigate that, the business owner could have given that insurance company some legal standing to, if not deny the claim, at least minimize it, right? Because
Yeah.
it's very hard to get off of the medical expenses portion, right? The insurance company is generally going to be held liable to those medical expenses, but if it can stop there, then you minimize the amount that claim impacts your business.
Yeah.
If that employee wants to get an attorney at that point and they want to sue, they want to say that there was negligence, it was an unsafe working environment, this is the position they put me in, that's where that claim grows. Now you have your medical expenses, and on top of that, you have all your litigation expenses and potentially damage awards. So what maybe could have been a 10, a 15, a $20,000 just medical claim becomes a $250,000 litigation claim with damages, and
Right.
the insurance company's on the defensive.
Yeah.
And if they don't if you don't provide the insurance company with that argument to make, they are going to default to settle. They're going to try to minimize their damages themselves and try to
Right.
offer a settlement. And that's where I get policyholders that say, I told the insurance company this was fraudulent, but they decided to pay the claim anyway. It's a little unfair assessment. The insurance company would love to have had a case to make to minimize.
And I'm assuming the experience modification is based on how much it cost, whether it was a settlement or not. And it,
Frequency and severity. So your workers' compensation experience mod, the calculation, that mathematical formula is looking at how frequently do you have claims, right? So the number, and how severe are they, the size.
okay,
And they impact your experience mod differently.
got it. And is it safe to these are regulated by state insurance regulators? So this is probably similar but different state to state.
Yeah, I mean, for the most part, there's a large regulating body, the National Council of Compensation Insurance, that does it for many states. Some states have their own independent rating bureau. At the end of the day, the mathematical formula is very similar, if not the same, for everybody.
Got it. Okay. Maybe last thing I want to talk about on risk management. Yeah, so again, safety management and hazard identification. That feels self-evident. But then the next one you said was company culture. Those feel like they're probably intertwined, right?
Very much. I mean, company culture. And so when I highlight company culture, I say, and this is one thing that insurance companies are very conscious of. Whether it hits your mod or not is debatable, right? Because it depends if you have a frequency or severity of claims. But when the insurance company is making a decision to insure you or not, it's well documented, well recognized. Something that does happen is an employee may get hurt, real or fictitious, whatever the situation is. And other employees look around and say, well, geez, Linda just got the whole summer off and was hanging out with her kids and is posting pictures by the pool. I need to get me some workers' compensation, right? And so when I boil down company culture, some organizations run into a position where, because of job dissatisfaction, because of management dissatisfaction, because of all those negative things that happen with a poorly managed company culture, employees start to say, I would rather be out on workers' compensation than come to work.
Yeah.
And that's bad. If I use myself as a specific example, I love what I do. If I were to have an incident and get injured, I would do anything I could to get back to my desk because I enjoy it. I like my company, and I wouldn't try to milk the system. If you have a poor company culture and all of those things that I just touched upon, employees may make a decision of, I'd rather be on workers' comp than go back and deal with that boss who I can't stand.
Yeah, because that was the scenario I was thinking about. It's like maybe even like what you do. It's why you chose that career, perhaps. But people join companies, leave bosses. Maybe this is a vacation from a bad boss, right? Or maybe they're just not bought into your culture, period, and this is a vacation from that. So that makes a lot of sense. Let's move to I'll say the big unknown sub bucket for risk management is 1099s. I just didn't know what I didn't know last time we talked. I had no idea. When I think employees, I think W-2s, how much 1099s can really play a factor in workers' comp.
So yeah, when it comes to 1099s, really, really important that you manage them. And we talked a little bit about this on the last session. 1099s are not employees. And so business owners say, well, I'm not responsible for that 1099. I'm not responsible for their workplace injury. I'm not responsible for the job site safety. I'm not responsible for any of those things. And that's very untrue for a lot of reasons. But a large part is kind of what we talked about in the past. A 1099 is happy being a 1099 until the moment they're not. And the moment they're not, the burden of proof is on the business owner to prove that they should truly be a 1099.
Yeah.
And workplace injuries is one of those flags that goes up when a 1099 gets injured and they don't have workers' compensation. Maybe they do or don't have medical insurance, or they have a high deductible health plan, or they have something that's not meeting those needs. They don't have income coming in any longer because they're a 1099. So maybe they don't have disability benefits. When push comes to shove and somebody's back is against the wall, they're going to do what they have to do to survive. And when they're in that position, they have friends and family members in their ear saying, well, what do you mean you don't have workers' comp from your employer? You've been working for them for years. What do you mean you don't have disability insurance for this injury? That's required by the state. You should get an attorney to really investigate this. You're really entitled to these things. And that 1099 starts to say, yeah, you're right, and challenges their status. And then it goes back to the burden of proof.
Yeah.
The burden of proof is always on the business owner. I tell business owners all the time, you are not innocent until proven guilty. You are guilty until you're proven innocent.
Yeah.
And so how they manage those 1099s, we always tell a business owner, if you're going to hire 1099s, only hire a 1099 that carries their own workers' compensation insurance, regardless of their statutory requirement. And so what I mean is they could be a sole proprietor with no employees, and no state in the country requires that sole proprietor with no employees to carry workers' compensation insurance.
Yeah.
But you should, as the company hiring them, they can get it. They're not required to carry it, but they absolutely can purchase a policy.
Yeah.
And if you are hiring somebody and paying them as a 1099, regardless of if they have employees or not, require them to carry a workers' comp policy, because one, that's a checkbox in the proof that they qualify as a 1099. They are carrying their own insurance for the operations that they're performing. B, if they get injured, they have the benefits of the workers' comp policy for themselves, so they can get their wages replaced, they can get their medical expenses paid for, so their back is not against that financial wall. And C, what we talked about last time, is you are now not having to pay their workers' compensation premiums when you get the workers' comp audit.
Yeah.
Because if your 1099 is uninsured, your insurance company is going to bill you for their wages because of that exact scenario. So many 1099s challenge their status as a 1099 when they get injured, and the insurance company gets wrapped into this claim for premiums that they may or may not have ever been paid for.
So just to be clear, so we've done a lot of shows on this topic. One of the most common areas employers get themselves in trouble is classification, whether it's exempt, not exempt, or W-2 employee versus 1099s. Lots and lots of mistakes, and a lot of times it's driven by the wishes of the employee. Hey, we're in a gig worker economy, right? Because I just want a part-time gig. I Uber at night. I bartend on the weekends. I prefer a 1099 so it can be a little flexible in my schedule. Oh, that sounds great. That might be attractive to me. But there's a duties test as laid out by FMLA, not FMLA, Fair Labor Standards Act, FLSA. There's a duties test that this is not your choice whether you want them to be an employee versus a 1099. There are legal tests that qualify or don't qualify here. And I think a lot of people make the mistake of naming people 1099s when they're just not supposed to anyway. But to be clear, if someone is, so they control their own schedule, they control the way in which they perform the work, they could sub the work out themselves, they control their own schedule, they meet all the duties tests to be 1099. If they got hurt in the job, would you as an employer be responsible for paying those workers' compensation claims? If they truly were,
you shouldn't be. No, right? If they were truly a qualified 1099, then no. So that circles back to your HR infrastructure of, yes, are you documenting that? Do you have a 1099 agreement in place? Do you have a contract with this person?
Yes.
So you're 100% right. That person absolutely should not be entitled to the workers' compensation benefits. It doesn't stop them from attempting to submit a claim, and the insurance company is going to expect you to provide as much documentation as possible to confirm that this person is in fact a legally qualified 1099.
And our experience would say employers get this wrong all the time, and they should have. They were truly illegally being classified as a 1099. They should have been either exempt or non-exempt, most likely a non-exempt employee. And that's where you get in hot water from the workers' comp side. But depending on how this claim arises, so if it's a claim from so you're being sued, uh, sitting for a judge, you might luck out and still have to pay the workers' comp for this employee. More than likely, this is going to lead to a state Department of Labor referral, and they're going to come in and weigh in. And unless this is the only person you've ever done this with in the history of your company, which is highly unlikely, then they won't even blink an eye going back 5 years or more to do an audit, and you're going to be paying employment tax, you're going to be paying FICA, you're going to be paying state taxes, you're going to pay workers' comp, and the penalties going back for years on all these people that you improperly classified. This goes way beyond workers' comp and gets real expensive real fast.
That's the snowball that rolls downhill, and it gets bigger as it goes, right? And so in your HR infrastructure, making sure everybody on the front end is aware we are 1099. We've done the testing to confirm that, not employer, but the business and the 1099 are on the exact same page. And you regularly verify that, right? Because one of those tests is, do they perform those duties for companies other than yourself?
Yeah.
And so you may have started hiring them in 2019 and they perform those duties for you and 5 other companies. And then something like the pandemic hits and those 5 other companies don't hire them anymore. And now they're down to working for just you. Well, you lost a component of that test. So making sure that you regularly verify that not only were they a 1099 at the moment that you hired them, they continue to be a 1099 and qualify to be a 1099 throughout that entire process.
Well, how you open the topic, I think, is that it's like they're happy being a 1099 until they're not. There are lots of employers and small business owners that they break the law every day in the same way I drive 56 miles an hour in a 55 zone because I know nothing's going to happen. It's not that bad of an infraction, so I don't really worry about that much. And so I think employers are used to, even if they're not breaking the law on purpose, they may think, oh, this is on the fringe, but this guy's worked for me for 5 years. Nothing bad is going to happen. But you're right. A trigger event like groceries going up 20, 30% in the last 4 years. And all of a sudden life's harder for them than you realize than it was when this relationship started. A lot of times it could be a friend or a spouse, a significant other. It's like, okay, you did get hurt and they were fine with the 1099 relationship, even though it was wrong. They were fine with it until the point of, wait, now I'm out of work because of this legitimate injury that I got while working for this employer, for this business. And the spouse is like, you're crazy. Your loyalty is insane to these guys. We're going to go bankrupt. You can't work. How are we going to pay these bills? No. And all of a sudden, what you thought was a great relationship, the employee is forced into a corner. They have to act in their own self-interest.
Yeah. And that trigger event, and that's what we've talked about, today, and that's what we talked about previously. Workers' comp is a very large trigger event that opens up Pandora's box on your 1099 classification.
Yeah.
Those things do fly under the radar on a regular basis. But when somebody gets hurt and gets backed into a corner, it opens up. And then when the Department of Labor is involved, you're in front of the court. The business owner has a massive disadvantage in that case.
Yeah. Let's move to number 2. So I think we've covered the risk management stuff. So HR infrastructure, safety, culture, training and education, obviously all the things you can do to create a safer work environment, create a culture of safety, have HR best practices where you have, handbooks where you're communicating with employees, you have incident reporting processes, you have investigation processes, you have good documentation, all that stuff. And then this really important thing about classification with your 1099s. The other two, so we've taken about half the time on bucket number 1. I think appropriately. That's where the big one. The next 2 were claims management and I'll say policy and agent management. What would you say are the things about claims management? So the claim has now happened.
Yep.
The expense is there. what is it that I as an employer can do to mitigate the cost of these claims, or tell me where your head's at here.
Yeah, so we talked about, right, this is a lot more controllable than people think, right? And that includes, well, the claim happened, we're going to go through the motions. You have some control in there as well. So, for example, we provide and we partner with insurance companies that provide services called nurse triage services, right? So, incidents are going to happen, and an employee will want to seek medical attention. It could be a slip and fall, it could be a chemical in the eye, it could be any number of things. And they're fine in the moment, but they're like, I should probably just get checked out. And so your options there are emergency room, which is incredibly expensive. So
Yeah.
you want to steer employees away from emergency room whenever possible. There's urgent care, a little bit more affordable, right? But still expensive. And then you got your primary care physician. But the insurance companies or your insurance agent may offer services as part of your policy for a nurse triage. And so in our case, what that is giving an employer access for the employee to call a licensed nurse, right?
Yeah.
An actual medical professional, and say, here's what happened. Here's what I'm feeling. What should I do? And that medical professional can say, hey, great, totally understand. Here's what I recommend. Let's ice it for the night. I'm going to circle back with you tomorrow. Let's see how you feel. And then we'll decide where treatment goes from there.
Yeah.
If they ice it and they wake up the next day and they're fine, no emergency room visit, no urgent care, no primary care physician. In a lot of cases, those don't count as a claims event. So you've now taken what could have been a claim and got the employee the medical treatment that they desired and didn't have to open up a claim with your insurance company. If you come in the next day and they're like, yeah, I'm still having this problem, they're going to help to direct service to the most affordable option, right? So avoiding the emergency room, trying to stay away from urgent care if possible, and seeking more cost-effective medical services. So now you take an incident that happened, right? That already happened. You can't take it back, but you appropriately manage that circumstance while with your HR infrastructure are documenting and getting witness statements and doing those things as well to prepare for where the claim could go, but hopefully doesn't.
Rob, let me ask this. So like everything you just said sounds super practical to me. I can also see how somebody could be listening to the last 3 or 4 minutes of this show and think, you damn capitalist pigs. So you're all out for yourselves. You're not a doctor. You're not qualified to know whether that person should go to the emergency room. How dare you try to play God? What if you told them to call the nurse and not go to the ER and they died that night? How dare you? What do you say to that person?
I mean, that nurse is going to err on the side of caution without a doubt, right? Their goal is to meet the injured worker's needs, right? And direct care in the most cost efficient way. If they call in and determine like this, go to the emergency room, right? Go. Let's stop talking about this. Go. Then that's what they're going to do, right? So the last thing that they want is that employee to go home and die, right? Because their goal of helping to control the cost of the claim just exploded in everybody's face,
Yes.
right?
Yes.
But there's no reason not to trust that medical professional who's a stranger any differently than the medical professional at the emergency room who's a stranger.
Yeah.
It's just a more cost-effective way of having that care directed.
Something that's come to mind, it almost feels like this is something that should be discussed and contemplated. And this could be something that goes in the handbook. Hey, if an emergency happens, and this has the advantage, I guess, of being a proactive, cost-conscious workers' comp brain combined with altruistic. I want the best possible care for my employee. And if you think about it, if some machine just cut my arm off, it's clear. It's get them to the ER as fast as possible,
No
right?
question.
If somebody, I don't know, turned their ankle or bumped into something, it's like, and they're in pain, and this is a real thing, but decided course of action. You could get on the phone with a nurse practitioner a hell of a lot faster than you can get to the ER. So they're not mutually exclusive, right? So I could see a scenario, but But when the incident happens, how will cooler heads prevail? Because there could be a lot of emotion with that, right? Maybe it was maybe it was an employee being stupid in the break room and throwing something around and asked to stop, and then an accident happened, somebody got hurt, and there could be emotions going crazy in any number of scenarios. You have to have thought this stuff out ahead of time, documented in a plan so that everyone knows exactly how to fall into step once something happens. Am I thinking about that right?
You are, right? You think about, anybody that's dealing with chemicals, restaurants, right? You can open up a jar of pickles and get pickle juice in your eye. If you ever got pickle juice in your eye, I promise it burns. You got an eye wash station, you rinse it out. Or maybe you got a known chemical in your eye. And as the average person, you're like, I don't know if this is hazardous or how hazardous it is or not.
Right.
So
Right.
you get on the call with that new nurse through the nurse triage program and you say, this is what I got in my eye. This is the action I took.
Yeah.
Where do I go from here? And then they can determine, like, okay, yeah, that's not an overly hazardous chemical. Rinsing it out was the best thing that you could do. You may have some irritation for the next little while. If it gets bad, absolutely seek medical attention. Let's follow up tomorrow and see how your eyes are. It doesn't stop you from seeking treatment by any means. The employee can disagree and say, I want to go see the doctor. Okay. What you're doing is you are giving them an option to get reassured that that injury doesn't justify the emergency room. They feel better, right? Emotions have calmed down. They're not as concerned about whatever it was that got into their eye, and and the situation is minimized.
Yeah. Yeah. Okay. So we talked about triaging in an appropriate way, that you're not playing doctor, but it has the employee's best interest and your financial best interest in mind. Those things can be very compatible. I think we did
Yep.
just talk through that. Um, we've talked here and prior about documentation investigation. So I think that's in order to react appropriately and calmly, you have to have a written policy to know exactly what I'm going to do next. You don't even have to think about it. You just go follow the plan, follow the policy. So that kind of ties back to your culture and HR infrastructure. What else can an employer do when you're already downstream enough that there's a claim, or there's about to be a claim. There's an incident has happened.
Yeah. So from there, right? So we talked about the nurse triage. That's one way to address an incident that happened that isn't necessarily an emergency. But there's other circumstances, right? Employee breaks a leg, breaks an ankle, has stitches, lots of things. And so at that point, a claim has happened. Medical attention was sought. It's justified. There's two components that become now dealing with this claim, how you manage that claim. So one is, have you created a return to work program? Is your insurance agent helping you craft that? Is your HR support services helping you craft that? Are you in a position where an employee could return to work in some capacity? Because what that does is it stops that claim at medical expenses and reduces or eliminates the lost wages. Insurance companies look at those two differently, right? They understand the need to pay medical expenses. They understand the need to pay lost wages as well, but they know that that's a lot more controllable. And so, can that employee return to work on a limited capacity? Can they return to work with some modified duties, right? Because just because you got hurt doesn't mean that you are incapable of working. It may mean you can't do the job that you were doing at the time, but is there other duties that you could do?
Or you could
That's
with a modification like a stool or frequent
Yeah.
breaks or some equipment, right?
Right. You minimize the amount that they have to lift, you minimize the amount that they have to stand on their feet, still allow them to come to work, be productive for the business, which is absolutely beneficial for the business, because we haven't even talked about the overtime expenses and the other expenses that take place unrelated to the workers' comp in a small business when an employee gets injured. But have you put that in place? Can you do that? And as a claim develops, the insurance company is going to ask you that. but you really need to have something formal set up in advance, because you also want to minimize any exposure to retaliation claims and discrimination claims. And you're making me do this for some other illegal reason. So you want to have your return to work program crafted ahead of an incident that occurs whenever possible.
Sure.
The other way to handle that is actually managing the claim. So insurance companies don't close claims as quickly as you would hope or that they could, right? They're managing a massive volume of claims, and an open claim is more detrimental to you than a closed claim. So when the claim is closed, everybody's under the assumption that the expenses have stopped. The lost wages amount paid isn't growing. The medical expenses paid isn't growing. And any insurance company that looks at this in the future, and as your mod is calculated, they're looking at that saying, okay, this claim is closed. What insurance companies do the moment a claim occurs, they know roughly what it takes to pay for a claim. If you break an ankle, the insurance industry knows what that should cost.
Yeah,
So
the actuaries know exactly to the penny probably how much this thing's gonna cost within a margin of error, despite whatever next 3 months you fighting it, negotiating is gonna be. They know it.
they know,
Yeah.
they know, right? There's a price on it. And so the moment that takes place, before all of those expenses are paid, the insurance company assigns a reserve. So they're like, oh, broken ankle, we're reserving this at 150,000. They may have only paid for some x-rays and emergency room visit at that point, but they're reserving it for a much higher amount. And then the employee seeks their ongoing medical treatments, their rehabilitation, their lost wages, all those things, and they get back to work. And so maybe they assigned that $150,000 reserve, but 90 days in, only $80,000 of expenses was accumulated, and the employee's back to work, and they're not seeking medical treatment. Well, you still got $70,000 of reserve being held against you, being calculated into your mod, being looked at your future insurance companies. And so you need an insurance agent that is looking at your claims, asking that question, hey, checking in and say, hey, how's Linda? How's her ankle? Is she back to work? Is she still seeking medical treatment? And then going to the insurance company and saying, why do we have a $70,000 open reserve on this claim for an employee that's back to work? And that's what we do at eComp as insurance professionals, is we look at all of those open claims, we determine if they should still be open, and then we put pressure on the insurance company appropriately to close that claim, eliminate that reserve, or reduce that reserve, to positively impact the mod calculation, right? Because it's a reserve is what the insurance company is setting aside to pay the claim. But if they don't actually pay any of that, you want to get that reserve closed as quickly as possible to come off of all your mod calculations.
Might sound stupid metaphor, but it's like if I check into a hotel, I've got a credit card with a $5,000 limit, and I'm checking into a hotel for a 5-night stay. They're going to put probably twice that as a dollar amount, a hold on my card, make sure that I'm not going to run up the bill and damage a bunch of stuff, and that the money's going to be there. That hold could impact my entire credit, right? Yeah. So same kind of thing here. These open cases, if I'm understanding you right, if you have too many left open too long or longer than necessary, they're gonna impact your experience modification, because they're gonna have to hold reserve for unknown future payments on more cases. So the more they're closed, the faster the better.
Identical concept, right? You would want them to close that reserve immediately after you left the hotel, and you want them to close your workers' comp reserve immediately after or shortly after that employee has returned to work and is no longer seeking medical services.
Is there anything else, Rob, on the claims management side that the employer can control before we kind of shift over? You already kind of pivoted, but I think there's an overlap. eComp or other firms like you guys, that what is controllable on the agent side?
Yeah, those are the big ones, right? Document, prepare, use the services that are available like nurse triage, have a return to work program. And when a claim actually does occur, work with your insurance agent and the insurance company to get that claim closed once all the services have been rendered.
Yeah. So what is it about the insurance? Well, and maybe it's the insurance companies, maybe it's the agents, maybe it's the brokers. Um, where is it that agents and brokers play in the ability to control cost?
Yeah. So the one, and I'm glad that we've taken this conversation the way that we have, because I think a lot of people think, well, controlling my costs comes down to shopping. And
Right.
there's absolute validity to that statement without a doubt. But from a strategy standpoint, there's so much more, right? So we talked about a lot of those other things, but you want to make sure that your agent is on some regular frequency shopping your policy. And so in our case, what we do when we shop that policy, because there is a benefit to staying consistent with an insurance company, right? If you can avoid it, you don't want to change an insurance company every year. Every couple of years is more appropriate, but you don't want to change every single year.
Yeah.
And so we take our clients out to market, we proactively shop it. And then when we find something better, we go back to the incumbent insurance company and say, hey, this is what some of the other carriers in the marketplace are willing to offer this client. Will you beat this price or at least match that price? And I will tell you, more often than not, they will. And so making sure that agent is, actively shopping that policy, keeping the insurance company honest, it is important. But I will tell you, there's an inherent conflict of interest for an agent in doing that, because insurance premiums earn an insurance agent a commission, and higher premiums equal more commission. And so a lot of agents out there, they don't want to shop their book of business. They don't want to actively knock 10% or more premiums off of their book of business every year, because the way that they may be looking at that is, if I lower my entire book by 10%, I lower my compensation by 10%. So it's really important to make sure that you have an insurance agent that is working for you and your best interest, and not just theirs. And taking that policy to market, proactively bringing you a marketing summary. We go to our clients at renewal and say, here's the insurance companies that we shopped with. If you're already with the best insurance company, you don't have to take our word for it. Here's the data. Or we'll say, here's the insurance companies we've shopped with. Here's what we found you. Would you like to make a change? Or do you want to stay consistent with the insurance company that you've been with? And we help them to make an informed decision. But I'll tell you, that is not the norm in the insurance industry. So it is important to make sure that your agent is doing those things for you.
How much could or should an employer expect a workers' comp agent to proactively share with them ideas like you and I've been talking for the last, almost hour now, about ways to reduce and manage their claims?
I mean, you should be having at least a once a year renewal conversation at a minimum, right? Um, if you are talking about that within your business, circle your insurance agent into that conversation, right? So if you're talking about your HR infrastructure and your return to work programs and your claims management, your agent should be at that table as a team member, helping you collaborate on those things. But at a minimum, once a year, absolute minimum biannually, reviewing that. Insurance companies also change, right? And they offer new services and they add different ways to control these
Yeah.
things and provide you with tools. So, a regular frequency of conversation with your insurance professional to make sure that you are managing all of these things appropriately.
Anything else we should be talking about that we haven't covered on how employers can control the cost of their workers' comp?
I think we did a really good job here, Mike. There's always more, right? We could talk about this for hours. We're only going to keep so much attention in here, but we hit some really important ones. And if the people that are listening to this have these takeaways and implement HR infrastructure and risk management and claims management, if they evaluate their insurance professional and make sure that they're getting all of those things that we talked about, they can control their cost, which is the purpose of what we wanted to talk to everybody about today.
Yeah, I mean, I knew a little bit coming in, but I learned a ton today, Rob. I appreciate it. I've been involved in a lot of business. I run some businesses, own some businesses, and I knew this was a little bit controllable. I don't think I realized how much. Maybe my recap, you tell me if I'm hitting it. So just like with your car insurance, you get a bunch of accidents, your rates are going to go up. And depending on your insurance provider, you might get some safe driver award for avoiding accidents, aka claims. Same thing here, but it seems like the spread is much bigger. Where if you don't have many claims, workers' comp claims, you might be able to get as much as a 30, maybe 35-ish% reduction in your workers' comp. Your experience modification is called the experience mod. But you could also easily pay 2 or 3x the same rates. And this gets really, really expensive if you have too many claims, the frequency and then the amount and severity of those claims. So as an employer, you have a lot of control here. You have a lot of control about creating a safe work environment where people don't have claims, period. And people just simply forget claims preceding that. People don't get hurt, period. So creating a safe environment, but some jobs are just inherently more risky than others. There's a lot you can do on the HR side of things, having a great handbook, communicating and training your your employees on that handbook, having them sign off and acknowledge receipt of their understanding, having great escalation processes, great documentation, because that employee who might have got hurt on the weekend and trying to file as a work comp claim, if you don't have all those great HR best practices and documentation, your word against theirs. And they have the medical bills to prove that they got hurt. And if you don't have anything to prove that it didn't happen at work, good luck to you, right? So you have a lot of control over creating a safe work environment. You have a lot of control over your ability to create an environment where safety is important. And you have great HR practices to document, to defend yourself in the case of claims that might be fraudulent. Then you also have the ability to offer things like nurse practitioner, doc phone calls to mitigate, provide better, faster healthcare service to your employee, who might also mitigate the circumstance and avoid unnecessary, expensive emergency room visits or even down the road claims by addressing it immediately over the phone with a doctor or a nurse practitioner, depending on who your carrier is. All that said, hopefully obvious, work with a great agent, work with a great firm like eComp, like you work for, that can be proactive in helping you and to manage that. And the punchline is you have a lot more control than you probably thought you did in your workers' comp rates. Did I hit it?
You hit it right on the head, Mike. Great summary.
Yeah. All right. Rob, always enjoy talking to you. This is the case for all things. I think all facets of all jobs that people think, oh, workers' comp, that's simple. Payroll, that's simple. HR, that's simple. They're deep oceans in and of themselves. So I appreciated you going deep with me and teaching me a few things. And to everybody else, appreciate you joining us today. Hopefully you learned something. If you did, like, share, comment, whether you're watching on YouTube or podcast platform of your choice, and appreciate that you're allowing us to come along with you on your mission to grow. Thanks, Rob. That's it for this episode of Mission to Grow. Thanks for joining us today. For show notes and more episodes, visit us at missiontogrow.com. If you found this content valuable, I invite you to share it with a friend and subscribe to the show. If you really want to help, I'd love it if you left a 5-star review on Apple Podcasts, YouTube, or wherever you listen. Mission to Grow is sponsored by Assure. Assure helps more than 100,000 businesses get access to capital, stay compliant, and develop the talent they need to grow. To learn more about how Assure can help your business grow, visit assuresoftware.com. Until next time.